Hey everybody, it is Friday the 4th. Going to dig into some of the March data here, go over some of what we saw last month. We'll touch base on some of the stuff going on behind the scenes, and then look forward to April, which is generally one of the busiest months of the year, and kind of see what we can expect moving forward into this month. So let's take a quick look here right out of the gate at the overall market data. So the top chart here, again, this is always going to compare month to month. So, Marches of past years. This second chart is a cumulative total for the year, comparing where we are today for the year compared to where we were at the same time in previous years. So hopefully that makes sense to everybody. So again, usually March, one of the busier months. Usually it's the start of the spring boom. Definitely an underwhelming month here in terms of normal activity. In fact, if we look down, so there's 508 sales in March, which just quickly looking at normal Marches here, that's 33% down from last March, pretty much the same from the previous year, 54 from 2022, which is peak madness. But every single year, all the way back to 2015. So this was the worst March that we've seen from a sales volume of sales standpoint in over a decade. Now, a lot of things going on right now. We'll touch base on that a little bit later in the video, but definitely softer than what I was anticipating in February, going into March anyway. Quickly looking, the new listings isn't accelerating quite as quickly as I thought either. And I think weather is playing a bit of a factor on both of these points. We've got a weather tab up here we'll talk about quickly in a bit. But the active listings is still climbing. Okay, so we've got about 20% more inventory on the market right now than we had this time last year, which is almost 60% more than what we had the year prior, almost 200% more, a couple of years back. Interestingly enough, back in 2015, they had less inventory, but more sales. So sales to new listing ratio came in under 42%, which is definitely in buyer market territory. Months of inventory hovering just under 5 at 4.8, which again, looking across the last 10 years, is basically the highest point we've seen. I'll scroll down and show you some visual charts on this stuff in a second. Average price is still holding, at that 640 tier, which seems like quite the resistance point here. I'm honestly shocked we haven't seen prices dip down a little bit yet, a little bit more anyway. And if you look at the average sale price to the list price, it's still around that 98% metric, which is pretty typical. However, I don't think it really tells the full story. So when you look at this stuff, you have to understand that it's only based off of the actual sales activity, and it doesn't actually factor in, with the exception of active listings, it doesn't actually factor in any consideration to the properties that don't sell. So same thing, like medium days on market. Yeah, it's 23. So a lot of people will see this number and they'll think, well, on average, not average technically, but the median days on market is 23. So if I put a property up, well, that means that chances are it'll sell within 3 weeks or 4 weeks. Well, that's not necessarily true, because this doesn't take into account that, all of the other properties that didn't sell are still on the market. And if we factored that in, this number would be a lot higher, right? Because, there's obviously plenty of properties that are out there that have been on the market for 2, 3, some of them 5, 10 months. So you start adding in those other ends of the calculation, this number would go up significantly. So just keep that in mind when you're looking at these types of things and trying to use that data to help you gain insight. Doesn't exactly carry over. And I actually did a little experiment. Sometimes I'll do this with ChatGPT where I use it kind of as a sounding board to talk through ideas. So that entire concept, I basically had like a breakdown, and we kind of went over different ways of how we can try and factor this into the data to try and consider it. And it has some pretty good points in here. I haven't exactly figured out specifically how I'm going to incorporate these suggestions into the data charts that I have, but we'll see if I can somehow come up with something that will give us some insight that we're not seeing on the surface level charts. A couple things though, so let's go back to this, and we're going to scroll down a little bit here. So this is London and St. Thomas, so you'll see the 508. Visually, you can see how terrible this March was in comparison to any other March in the last 10 years. New listings, pretty, like I said, are pretty normal. I do expect this is going to climb, but we'll see. Active listings, this is the second highest active listings in the last decade, and it's the highest months of inventory of the last decade. So keep in mind the months of inventory is also factored by the sales activity. So if we see sales increase, sharply in April, don't be surprised if you see this number drop down. I wouldn't be surprised if we see it go up or down, to be honest. It really just, it could bounce down a bit, bounce up a bit, depending on fluctuation of sales activity and inventory. But I don't see it like dipping down below 3 or anything like that anytime soon. What else do I have on here? So this is pretty interesting too. So the average difference over this 10-year period, okay, and again, I use ChatGPT to help me break down this data just by basically taking the raw data here in our charts, copying it into ChatGPT, and just asking it to look at different correlations of data, and it can spit it out pretty quickly for me without me having to go randomly calculate it, manually calculating everything. So the average difference between March and February from a sales activity standpoint, that's generally 36%. This time around, it was under 7, which is pretty interesting. So I also asked it to go and look at the March to April difference, and that was closer to what we just saw. That was 8.6%. Usually you see a tick up in activity in April over March. So it'll be interesting to see what happens this April. I will say a couple of underlying factors that are obviously at play. We've got everything that's going on in the US with tariffs, and I'm not going to spend a lot of time talking about tariffs because, again, I really don't think at the end of the day, it's a huge impact on what's actually happening. I still think it's just the excuse that everybody likes to point to. And honestly, I just can't keep up with it anymore. It's like every day that's tariffs start tomorrow, and then the next day Canada's exempt, or, oh, well, we're going to give you an extension. And, I just can't keep up with our tariffs here or our tariffs not. And again, it's not going to change anything in my opinion. It will put negative pressure on the bond yields, which we are seeing already. So you can see the bond yields are dipping down around the 2.45 mark right now. Which is going to put pressure on the Bank of Canada to cut again in April. So we'll probably see that 2.75. Is that where we're at? We're at 3 now? Can't even remember. We'll probably see another 0.25% cut coming mid-April there, which, again, just say what you want about it. Everybody will think, that's going to increase activity. I don't think so. We've seen how many cuts now. Hasn't really played out the way people expected it to. So I'm not sure why we would expect any different this time around, with one exception. That exception being weather. I will say that March has been a pretty sloppy month here. We had that 1 week, I think, in the start of the month where it was really nice. And then it's been kind of a typical fool's spring in Canada where, one day it's -5 and, freezing rain, and the next day it's 20 degrees. So that's always going to play a factor, I think, in buyer activity in the spring. I think once the nicer weather comes around, you're going to see stuff like open house traffic and buyer activity pick up naturally, like it always does. So looking ahead here over the next couple weeks, definitely this coming week isn't super ideal. Still got a lot of snow in the forecast and negative temperatures. But if we look a little further into kind of middle of the month, you can see we're starting to get more into that typical April showers time frame or temperature frame here, where a lot of these highs are in double digits. So I expect we're going to see a busier second half of April as we see the temperatures improve, with kind of the next week or so here still being sluggish. I don't think we're going to see sales activity like climb through the roof by any stretch of the matter, but I do expect it to be better than March. I'm kind of thinking, we'll probably see sales somewhere between the 600 and 700 mark in April, which is still going to be a pretty crappy April in the grand scheme of things. I just really don't see it going bananas in the next 30 days here, or less than 30 days at this point, especially because the other thing that we're dealing with right now is a federal election, which is coming up at the end of the month. And I don't know if that's playing a factor in terms of people's decisions to hold off or what. I really don't know. I don't see why. I don't think anything's going to change drastically overnight come May 1st. Again, the interest rates will continue to fall, but prices continue to hold, right? And I think that's really the biggest thing is it goes back to affordability, prices remaining high regardless of what those interest rates do. People aren't willing to let properties go for what buyers are willing to pay necessarily, and that's is what it is. In terms of the new listing side, I think we're going to see an increase in the total over last month, but I expect it to come in a lot closer to March's numbers, which was around the 1,200 mark, but I think we'll see around 1,400 new listings in April. This is, of course, going to cause months of inventory to increase if the new listings outpaces the sales. So I'm anticipating us to cross over the 5 months of inventory mark come come May. But again, that could fluctuate month over month the following month if, we have a kind of a late spring market here. Hard to say for sure. What else? Just a couple quick things, I guess, from a couple different GTA realtors that I always find have some pretty insightful stuff. So John here, he works out of the Niagara market. You can see here, he's basically saying that it's pretty much crickets over there. Also, he's posted this little chart here. We're just tracking the number of listings that mention the words bank sale or power of sale in the listings. That's up over 200% since last March. And I expect that probably is going to continue to climb too here as, some of these people run into renewal cycles that they can't make work and things start to break down. Of course, not everybody's going to be in that boat, but certainly there are people suffering out there, and that's going to likely continue here. Mr. Daniel's got some good TREB data charts here that he posts quite frequently. So this is the worst March that TREB has seen since at least 2010, down 24% from last year. And again, what happens in Toronto generally, the shadow falls to London. So, we're always kind of the smaller Toronto. So whatever is happening in Toronto, that trend line generally will follow. So we'll have to keep an eye there and see how things go. We talked about the bond yields. I think that was about it. So again, in terms of April, I think we're going to come in somewhere between the 600 and 700 mark on the sales. I think prices are anybody's guess. Honestly, if you look at these charts, the price chart, it's that 640 band that seems to be kind of our resistance point here. Where am I looking? Average price. So right in that, you can see how many months are falling within that range, right? And it's just kind of like up 8% or 2 1 month, down 1% or 2 the next month, and it just keeps happening over and over again. Actually, I want to take a quick look at the sales activity chart here on this graph. So just to give you that visual idea of what we're seeing, right? So this is for a long time so repetitive. You can see a clear change in trend in this last few years here, okay? And again, keep in mind, we usually see these peaks in April, May, June, sometimes. I mean, what was the peak last year? I think it was, so we had a bit of a fall run. At 661 sales, but in May it was 774. I mean, again, I don't think we're going to get over 700 in April. We'll see. But unless we start to see a breakout here, this trend is going to continue where we're seeing lower highs, which generally means lower lows. Um, I don't know. It's a bit of a grim outlook here in terms of what the charts are showing. Of course, things can change. I do think on a personal level, it feels like things are getting busier to some extent. But it's certainly not like back here where we were seeing over 1,000 units for sale. Like in terms of the listings we have on the team, going through them, like some of them have been listed for a month or so with 0 showings. Some of them sell within the first couple of weeks, depending on how they're priced. I'm thinking of the ones that I have right now. Usually that first week that you're listed, the activity is kind of at its highest side, and then it starts to taper off. So I'm still seeing that trend play out in a lot of the listings I have right now. But it's a real mixed bag out there. It really is. I'm still seeing the odd situation where there's competing offers and properties are selling over the listed price without conditions. I think you really have to be vigilant out there, and don't get wrapped up emotionally in a scenario like that. If you have a buyer and all of a sudden there's 6 offers, and you got to really do your research to make sure that person's not overpaying to the point where they're going to end up in some of these bank sale scenarios in a year or 2, 5, whenever renewal comes up, or whenever they can't afford their mortgage anymore. Who knows what the situation is? But yeah, in terms of the outlook here, it's hard for me to be like, oh yeah, spring, we're just going to get over this 1,000 unit mark. I mean, we haven't been over 1,000 units since March of 2022. So I don't see us just busting through there anytime soon, which means the trends will likely continue. And I don't have data to support that we're going to see a stronger second half of the year than the first half of the year. So I don't know exactly what that's going to mean long term for this year, but it does kind of point more towards price, negative pressure on price long term, especially in the last 6 months of the year. So we'll see what happens. I still think you've got to be smart out there when you're making purchases, and when you're listing homes as well. You have to be really strategic about how you price them, so that you're going to get that interest in order to get the property sold. Because again, if we look at active listings, this keeps climbing, and I mean, any market's just supply and demand. We know the demand's low, and the supply is going to continue to get higher. That just means price is going to get cheaper. So who knows? We'll see. Hopefully that helps some of you guys. If you have any questions, feel free to reach out. Always happy to help. Thanks, guys. Take care.